Welcome back, Better Agents. Here in this video, we're talking about choosing the right insurance cluster, network, or aggregator. Choosing the right insurance cluster or aggregator for your agency depends on a lot of different variables. Everything that I'm going to talk about in this video comes squarely from my own opinion. It's very subjective and depends on a certain point of view.
A certain point of view?
Luke, you're going to find that many of the truths we cling to depend greatly on our own point of view.
Now, before we get in the video, I want to do something very special and unique. If you're watching this video and you're an independent insurance agent, or maybe you're just thinking about becoming an independent insurance agent and you want somebody that you could talk to, collaborate with, brainstorm with, maybe you've got thoughts or ideas and you want to get feedback or advice on them, then down below in the description of this video is a link to my personal calendar. I'm opening it up and I'm making myself available for anybody that wants to have a 30-minute conversation by Zoom with me. If you just want to talk, you want to get some direction on some things. We can talk about sales and marketing, we can talk about agency operations, we can talk about technology. It doesn't matter. It's free of charge. There's no pitch. I'm not going to sell you anything. I'm just making myself available to anybody that wants to have a conversation regarding their independent insurance agency. The first thing that you need to do when evaluating network clusters and aggregators is you need to find one that's aligned with your agency niche. If your agency niche is writing high net worth clients, affluent clients, private clients, then you need to find the cluster or aggregator that's going to give you the market access to the carriers that provide those products. So find a cluster that's going to give you market access to Chubb, AIG, Pure, Cincinnati, Nationwide Private Client, any of those. You need to figure out what your niche is, and then you need to find the aggregator that's going to give you the access to the carriers and the markets to match that niche. The second thing to consider is how are you going to pay these insurance clusters and aggregators for the ongoing market access? There are two ways that this is commonly done. The first way is to pay them a percentage of your book of business or the production that you generate on a monthly basis. The second way, which is the way that I prefer, is to pay the aggregator a flat monthly fee regardless of your production. So every month, you know exactly what your expenses are, and it doesn't change based on how much premium you write or how much commission that you're generating. You're paying them the same amount each month. The reason that I prefer the flat fee model versus the percentage model is because I want to know what my expenses are. It sounds really good and really appealing when you're first starting out to just pay them 10% of your book of business. Because if you're only writing $20,000, $30,000, $50,000 a month and you're generating a very, let's just call it what it is, a smaller amount of commission because your book of business is small, it looks a lot more enticing to pay them that smaller amount. But what happens when your book of business gets over $1 million in revenue, $2 million in revenue? We all get into this thinking we're going to generate a lot more than that. So the fee that you pay them goes up and up and up and up and up. It makes a lot more sense. Even though it's painful in the beginning to pay them a flat amount of $500, $800, $1,000 a month, at least you know what that is, and you can start to go into the agency sales mode and just grow the agency and just know exactly what your P&L is going to look like. So I prefer personally the flat fee model when dealing with networks and aggregators. The third thing that you need to do is you need to negotiate your exit clause. Nobody ever goes into a relationship expecting to break up, but when you're approaching relationships with clusters and aggregators, you need to have it in the back of your mind that one day you're going to want to walk away.
I don't understand. Things were going so great. What happened? Something must have happened.
It's not you. It's me.
You're giving me the it's not you, it's me routine? I invented it's not you, it's me. Nobody tells me it's them, not me. If it's anybody, it's me.
All right. George, it's you.
You're damn right it's me.
You need to negotiate what the breakup looks like. Some clusters will require that you pay them a large sum of money or a percentage of your book of business to leave. You need to negotiate that. You need to figure out what it's going to look like if you ever want to leave. And you should just expect that one day you're probably going to want to walk away. You don't want to sit there at the end of the day having to write a $6 or $7 figure check to a cluster or aggregator to break up with them. So negotiate that. Get that in writing, put it in your contract, and make sure you understand what it's going to look like and that you're okay with the idea that you're going to want to walk away one day and you're okay with the penalty to do so. The fourth thing that you need to do is going to seem a little odd coming from somebody in the software space for the insurance industry, But you should avoid or seriously reconsider using aggregators and clusters who force you into using certain types of software. The software that you use in your agency should be tailored to your individual needs. If you're an agency owner in coastal South Carolina, your needs in an agency are drastically different than the needs of an agency owner in Laramie, Wyoming. The reason that the cluster is requiring you to use a certain AMS is because it makes it easier for them. It doesn't make it easier for you. It makes it easier for them to run reports, access data, keep tabs on what's going on in your agency. As an independent agent and business owner, you need to have the freedom to choose a software that's going to be the best fit for your agency, for your clients, for your employees, for your niche. Don't allow a cluster or aggregator to force you into using any particular software or service. The fifth thing that you need to be on the lookout for is making sure your cluster or aggregator isn't trying to take an ownership in your book of business. This is something that's actually more common than not and that you need to be on the lookout for, because these groups will write in the contract that they have an equity stake in your agency, that they own your book of business, whether it be for a period of time or until you get to a certain production level. You want to avoid that. Negotiate that out of the deal. Tell them that is a deal breaker. If there's anything that you get out of this video, it is this: you need to own your book free and clear without anybody else saying that they have a right to it or a claim to it. They don't. You should have 100% ownership stake in your own book of business, in your own agency. The sixth thing that you need to evaluate when looking at clusters and aggregators is make sure that they're giving you some other form of value besides just market access. If the only thing they're giving you is logins and passwords to carriers and telling you that you can write the business, that's fine, but their fee or the percentage, whatever it is that you choose, needs to be reflective of that low common value. Those should be table stakes. That should just be what gets you in the doors, market access. You need to go back to your group. You need to ask them, what are you gonna do for me in the form of marketing? What are you gonna do for me in the form of making sure I get discounts with vendors? You don't necessarily want them requiring vendors, but they should be able to negotiate discounts. They should be able to bring these things to the table so that it's a benefit to you. Don't just settle for market access, but require that there's a different level of training, recruitment. Another common one that I think is very important is if you're looking to acquire books of business, how are they going to present that to you? Are you going to get opportunities for that? What's the perpetuation plans for the other people in the network or group? You need to have more value than just market access. A big benefit to using an insurance cluster or aggregator is your ability to participate in profit sharing or contingency bonuses from carriers. Here's what I'm thinking about when I'm evaluating whether or not I want to join a cluster versus going direct with carriers for appointments. I think about contingency and profit sharing. It's far more likely that with a cluster, I'm gonna be able to participate in ongoing contingency bonuses and profit sharing with the carriers versus if I'm direct, because when I'm direct, I'm subject to the losses that I have. So if I'm in an area that has a lot of catastrophic losses or a lot of claims, I know I'm not getting a check for 1, 2, 3, depends on however many years until I'm profitable. Versus if I'm with a cluster or an aggregator, I can pull all that stuff together. The way that I think about it for very simple terms is when I'm direct, it's like I'm a batter up to the plate and I'm either hitting home runs and grand slams and the checks are great, or I'm striking out, I'm getting nothing. Whereas if I'm part of a cluster or an aggregator, then I'm never hitting home runs, I'm never knocking it out of the park, there's no walk-off moments, but I am getting on base every single time. I'm getting doubles, I'm getting singles, some of my checks are big, some of them are small, but I'm participating, I'm getting something. What you need to evaluate is this: how much of your contingency check does your cluster have claim to? What are they getting back? For some, it might be 5%, it may be 10%, and that might be okay. Again, if they're giving you a lot of value, they're giving you a lot of training, a lot of things, it should be an okay expense, but you need to know what that expense is, and you need to understand that if you're participating with them, they're gonna get something. You just wanna be on the same page with them and make sure that it's what you're okay with. And again, as with all these things, you might wanna negotiate what that number is. If you're coming in with a lot of production or a big book of business, and you know you're regularly getting checks, that might be something that you can negotiate in the process. Another thing to evaluate is how much of the day-to-day operations are these groups gonna wanna be involved with. For some, they're gonna wanna be involved with everything from production to training to recruitment to your financials. You need to determine if that's an okay thing for you. For some, they might just be saying, Here's your logins, here's your carrier access. We're gonna give you a call if we need anything or when we have your profit sharing check. You just need to know where at on the spectrum you wanna be. These are things you're gonna wanna evaluate in the discussion and negotiation process, because for some of you, if you're brand new to the industry, you've never run an agency before, might not be a really bad thing to have somebody really playing a strong role in that training and development of your agency. Whereas for others, if you're coming in and you're saying, I've got this, I've been doing this for a long time, I don't need you to play a role in my agency, you need to know that. You need to bring that out in the discussion process and determine really where your comfort level is. There's no right way or wrong way with how much of a role they play. You just want to make sure that it's a good fit for you. The next thing that you need to consider is who has access and control of your agency data. For some of these groups, they make it impossible for you to pull something as simple as a book of business report. I think that that is wrong. You should have access to your book of business or any report in your agency at any time. You should have the ability to run those reports. Again, it goes back to not using clusters or aggregators that force you into using their software where they control it. You need to have 100% control. That's why you own this business. If you wanted the opposite, you'd go back to being captive, or you'd be an employee in a call center somewhere. You need to have access to your business data. You need to be able to get it whenever you want and use it however you want. I really hope you enjoyed this video on choosing the right insurance cluster or aggregator for your independent insurance agency. If you're not subscribed to the channel, make sure you do so. Like this video, comment down below, and don't forget, in the description, there's a link to my personal calendar. Feel free to book a 30-minute call with me, free of charge, no pitch, no sales. If you just want to bounce ideas off of me, talk about things, I'm here for you. I want to make sure that you have a better agency. We'll see you soon.